Hi guys and welcome back to Yashi. Today with a real estate market update. I wanted to make this video because I still see a lot of negativity about real estate, mortgage rates, demand and everything. And for the millionth time, I need to debunk this stuff because I feel that a lot of buyers are being pushed out on the sidelines. They keep on looking at the market on a daily basis. They think everything is gonna crash. But unless you're living in California, Phoenix, or some specific markets, on average, the real estate market in America is still extremely strong. So let's hit record here and let's start with mortgage rates. Why am I looking at mortgage rates first? Mortgage rates are, let's say, the cost for you to get a mortgage. And the more expensive it gets to get a mortgage, the more difficult it will be for the average person to buy a house. And this is why mortgage rates are pretty much the number one driver for buyer demand in the real estate market in America. So let's start with this. We know that mortgage rates have been going much higher compared to last year. Last year we were around 3% at the beginning of the year. We reached almost over 7.5% last year, but now we dropped back to around 6 to 6.5% on a 30-year loan. So we're still very high compared to last year, but if you look at the historical of mortgage rates across the entire history of the United States, we are still under the average number. Keep in mind that 40 years ago, mortgages were around 15 to 17% interest, which is crazy to think about, but that's what pushed the average higher. So in the grand scheme of things, the situation is not that bad as people are saying. But let's go on the real estate market. People like Meet Kevin, Graham Stephan, many other of these influencers are saying that real estate is gonna go down, real estate is looking bad, demand is slowing down, days on the market are increasing, which is true. But in the grand scheme of things, how, let's say, bad is it? Well, let's look at some data here. Let's start with the median sales price, which is the number one thing that people are talking about. Did sales prices actually drop? And if we look at data, this year compared to last year, same period, prices are actually higher. Not by a lot, we're talking about 1% on average in all of America, but on paper, prices did not drop yet. The question is, what will happen in the next couple of months? Because if you remember correctly, in 2022, during mid-year, we saw the last gigantic spike in prices, and then as mortgage rates became more and more expensive, prices started to drop. So yeah, prices went down from an all-time high, but if we look at a year-over-year data is still looking positive for the real estate market. I believe that we will not see the 10% hikes we saw mid-year last year, which will mean that from a data perspective, numbers will look lower compared to last year. Anyway, although this is true, generally speaking, real estate is still high. It is not dropping 10%. It did not drop 20% like people predicted in 2022. So that is firstly debunked. Now on to the main thing that I always look at, which is the inventory of houses. And if we go right here on active listings, active listings represents the number of houses that are for sale right now. In 2022, as demand started to, let's say, shrink because less and less people could afford a house, people were expecting that homes would take longer to sell and more homes will hit the market because the slower the demand, the more homes will pile up and the less they will get sold, the more and more this effect will become stronger. While initially in 2022, this effect was true, and we can see it right here on this curve, it then started shrinking. What happened? Basically, towards the end of 2022, sellers stopped selling because one of the main drivers of buyers and sellers market is people that already own a house, selling the house to upgrade into something else. The problem is most people that owned the house in 2022 locked in a 3% rate. So upgrading into a new house with double the interest didn't seem as a financially good, let's say, choice. So many sellers decided to simply back off, keep the house, keep the status quo they were in because they locked in an amazing rate. And this is why towards the end of the year, we see a sharp decline in supply of homes, which is continuing. As per now, the active listing, let's say, amount is still lower than 2021 levels. Close, but still lower. And in the grand scheme of things, if we compare to pandemic numbers, so 2020, actually beginning of 2020, so pre-pandemic numbers, the numbers are extremely bad. We're down by at least 300,000 units on a, let's say, a US number perspective. Now let's go on new listings. New listings is what is showing us what can help us predict where supply is going in the future, where supply has been going. And again, we can see the effect of what I just mentioned, sellers not wanting to sell their homes. Most of the houses that are coming on the market right now are builders trying to get rid of the last inventory they built in the last year. And again, if we look at new listings, the amount of new homes that are being listed on a monthly basis is lower than 2021, 2020, and 2022. This is not looking good for the average US home buyer, because as new supply is lower than ever before, it will affect the general supply, which will affect the amount of homes that will be for sale in the future, which will create a supply shortage as we saw in 2021. Once people figure this new status quo out and will come back onto the market, we could see another effect that we saw in 2021 with home prices increasing by double digits. Am I sure this will happen? No, this is not financial advice. This is simply my opinion. This could be mitigated or stopped if the Federal Reserve would keep on increasing interest rates by much more than what they're expected to increase this year. We saw in the last meeting that the expected target rate of the Federal Reserve will be over 5%, but seems to be nothing more than that. And if that is the target rate, and people are expecting that, I believe that is not enough to revert this trend that could lead to increasing home prices. I believe that if the Fed doesn't, let's say, hit the market stronger than what it already is doing right now, home prices could go back into large home price increases, which will hurt the average home buyer in America. Let's look at some local areas here. I'm in Leesburg, Virginia. This is the area that I live in. This is a pretty large city if we look at population, Leesburg, Virginia. We have 48,000 people. I don't know how many of those are in buying age or have the financials to buy. Fact is, we have only 136 homes for sale in a population of 50,000 people. Let's say that only 5% of those can buy. We have a couple of thousand people competing for 136 homes. Could be better, could be worse. This was a general throw-in of data. Now let's look at some other data, again, with the Redfin tool here. If we go on, again, new listing median price, and we look at other metros, can write Phoenix, we can find some areas where the effect is worse. Phoenix, right here. Actually, Phoenix is still positive compared to last year. Let's go to Boise. Boise is one of the cities that has been hit the most. Boise has worse prices in 2023 compared to 2022. I mean, Boise was also one of the cities that was hit the highest in terms of price increases, especially in the beginning of 2022, and prices there are prohibitive. We are above the national average of home prices. So it makes sense to see these kind of numbers. On the other hand, if you look at Leesburg, Virginia, Leesburg, there's no Leesburg. Let's look at Lynchburg, Virginia. This is another area where I invest in. We can see that home prices are, whoa, I did not expect this one. Home prices are much higher compared to 2022. Out of personal experience, I can say that this makes sense because in a city of 80,000 people, there are only 120 homes for sale, of which 10 are entry-level affordable homes. So competition is pretty feisty. The last house I sold went under contract in 1 day, and I'm able to buy houses only off-market and with cash offers because the competition is feisty. So every single city has different numbers. On average, it's still looking better and positive numbers-wise. So we see positive numbers. We didn't see decline in prices. We saw a slowdown at pace, but not a decline in prices. And I believe that the trend could continue, may stall for a few months, but we're laying a foundation for another gigantic increase in prices in the shorter term future. Guys, I hope this makes sense. Again, this is not financial advice. Please always do your research. I'm just showing some numbers and a different perspective compared to what you see around on media outlets and YouTubers. Because while everybody is talking about a crisis, we also have bigger companies buying up entire inventories in cash. But this is another video. Thank you for watching.